Good morning, everyone. This is Susan Kramer from Coldwell Banker On Track Realty. Today I'm joined by Jodi Schultz. She's a mortgage broker with the Source Mortgage Center, a Dominion Lending franchise.
You got it. Thanks, Susan.
Oh, I have a bit of a headache today, so I'm really sorry if I'm a little off. So Jodi, we've been talking in the last few episodes with you about different types of mortgages, and there's one that we haven't covered yet called a cashback mortgage. Can you explain to our listeners what that's all about?
Yes, for sure, Susan. And well, I'll go over it. So a cashback mortgage is one where the borrower receives cash back, just like it sounds, at closing from the bank. So they borrow the regular amount that they need to buy the home, but then they receive a percentage of cash back. So those can range for all the way from 1% to 5% cash back. Now, it's not to be used for the down payment. You still have to have your own down payment from, wherever you have your down payment from, gift or regular savings or whatnot. But the cash back is intended to help somebody who's now basically drained their savings to buy this home have a little bit of money back, whether that is to put back into savings, or for a lot of borrowers, they can use it for things like closing costs, like their lawyer fees, moving expenses, and even furniture. Like that's a common one where people are buying a brand new place and they don't have a lot of furniture. It's often cheaper to take the money on the mortgage as a cash back than to go to, say, like some of those big department stores and do financing through them. Now, of course, there's going to be a fee for the cash back. Nobody's going to just give you money for free. So what the lenders do is they charge a little bit higher interest rate in order to get the cash back. And of course, the amount is going to depend on how much cash back you're receiving. But just to be clear, the banks actually don't make money on this. So the additional interest they charge is really just intended to pay back the cash back that they've lent you over the term of the mortgage. So whether that's, generally it's 5 years. But they're not making additional money on you. They're just building in how much interest they need to charge in order to get paid back the amount that they lent to you. So it is really a decent product for people to consider if you are a little bit tight on cash after purchasing a home. It's something, again, as long as you qualify for, we just add it in. It just goes with your regular monthly payments. And then the lawyer will actually advance you cash back when you go and sign the mortgage. Now at the beginning, I kind of said, don't be confused, because there's a lot of lenders right now who are offering cash back at signing, which isn't a true cash back mortgage. Those lenders are typically the major banks. And what they do is they want you to switch over your checking account to that major bank. So say TD Bank, for example. And if you agree to pay your mortgage payment out of a checking account from that major institution, they'll give you a little bit of a cash reward for switching your bank at closing. That's not an extra interest rate charge. That's just an incentive to get you to open a bank account with them. Because again, they're building in the fact that you're going to have money in that bank account to pay your mortgage, and they make money off of you putting deposits in the bank. So anyone listening to this, you probably will see it's very common right now in a busy spring market that a lot of the major banks are offering. Usually it's somewhere between $500 and $3,000 cash back, depending on the size of the mortgage. And I know most of the major institutions are offering that. So like your TDs, BMO, RBC are the top three that are big on offering that at signing. But again, it's not without nothing. You have to open a bank account and pay your mortgage out of that account to get that cash back.
Anyway, that makes a lot of sense. In the 3 major mortgages that I had, they were all at different banks. And even though I used a mortgage broker, I had to open a checking account at those banks. And now that totally makes sense for why that had to happen.
Yeah, only if you get a cash back. So again, you can absolutely get a mortgage. Like if you have all your banking with CIBC and you're looking at ATB to do your mortgage, that does not mean that you have to open an ATB bank account to pay that mortgage at all. You can absolutely keep your regular accounts. Nobody's going to force you to switch banks. The only reason you would switch is if there's an incentive to do that in terms of, getting a little bit of money back from closing. And a lot of people are willing to do that. They're usually not super tied to one bank or another if they're going to be offered $1,000 at closing, because that helps pay for some stuff. So
yeah. Well, that's brilliant. Okay, well, thanks for sharing today, Jodi. If any of you have questions about mortgages of any type, I've got Jodi's information streaming across the bottom there. Feel free to contact her. I know she'd love to talk to you.
Yeah, for sure. Thanks so much, Susan. Have a great
Yeah,
day.
thanks for joining me today. Bye-bye.
Take care. Bye.